Okay.
Hi everyone, this is Rohit from Lifestyle Mastery, and today I'm excited to have James Wang, who's a general partner in Creative Ventures, which is a deep tech fund investing in early stage companies. James was on the core investment team at Bridgewater Associates, founded a health tech startup, and worked at Google X. James has done his master's from Georgia Institute of Technology and an MBA from University of California, Berkeley. Welcome to the show, James.
Yeah, thanks so much for having me.
Awesome. So, you have an interesting journey, you being part of investments, but what got you into this world of startups?
I think in terms of startups, it started from being at Bridgewater at the time. And it's personally, I found it a great experience. It's a great way to, as an early career thing, get exposed to a lot of different people, different ideas. And in terms of global macro, broader macroeconomics, really interesting area. Hedge funds in a way are almost like a math puzzle. So it's probably especially for global macro, is probably the purest way that you can be in business and almost be just working with pure math or pure concepts and theories, just in terms of figuring out how the global economy works, figuring out the interactions and everything. But it's all very ivory tower in the sense that it doesn't really matter what's going on the ground anywhere. What matters is you understand the interactions of them. So in a way, you're almost like a physicist trying to understand the broader interactions of everything. But one thing I just realized was between seeing, during my time there in terms of the Euro crisis and a lot of these different things, I was pretty divorced from what was happening in the world. As we would say, my beta to my personal beta to the world was quite low. So just depending on whatever is happening in the world, whatever chaos or whatnot, it's fine so long as we know what's going on and we're betting in the right direction. Unfortunately, friends and family and everyone else that you know and love usually have to be a little more grounded and connected to the world and care what's going on inside of it. So I started to feel a little bit disconnected. I saw a lot of exciting things happening in technology, especially at that particular time period. Since I started to basically want to leave around 2013 and then basically had left and had gone to business school and sort of has jumped purely into the very hard into the startup space by 2015. Even at the 2013 point, we were starting to see a lot of interesting things happening with compute, interesting things starting to happen in AI that finally actually came to fruition in 2015, where a lot of the AI benchmarks, especially in computer vision, started to match human capabilities. There was a pretty fundamental shift in the technology landscape at that particular point in time, where before, around sort of the 2010, 2015 mark, you had a lot of general digitization. So the things that you would recognize in terms of SaaS, even in terms of social networks and everything, taking what we know now, what we used to be on paper, what used to be like phone calls or whatever, and digitizing it to now having technology be able to itself have capabilities matching or beyond what humans can do. So that was an exciting thing that was happening at the time, not just in AI, also in synthetic biology and other areas. And that was really the reason why I looked at it and went, I really want to get involved in technology, both because I want to get closer to the ground in terms of what's going on in the world, but also because there's a fundamental revolution and shift at that particular time in what technology was able to do that I think many people didn't quite recognize at the time, but it was already happening and developing then.
Got it, interesting. And you started your career in nonprofits and social impact investing, but you left your career there. Why is it difficult to build careers in nonprofit?
Yeah, I mean, I cared a lot about being able to make an impact and be able to change things. And maybe this is what also sort of brought me back down to earth and wanting to get involved in technology and whatnot. Bad as the reputation for technology is sometimes nowadays, and even especially for big tech. But in terms of what I saw in nonprofits was, okay, there's a lot of different opportunities to make an impact, help people. And honestly, I left the space because I thought that nonprofits wouldn't be able to make as large of an impact, to be completely frank. Because a lot of the ways that nonprofits work, even when they're trying to be sustainable, is pretty non-sustainable, is pretty idiosyncratic. is something that's actually very hard to measure and figure out. And whatever is hard to measure and figure out is hard to actually optimize. So what I saw a lot in the nonprofit space was everyone just decided arbitrarily, this is what we're going to optimize for. Does it actually make as much impact in the world? It's actually kind of hard to say. And I would have actually argued many times no, especially if we measure it with different objective measures over time. But it's just so hard to actually grasp, understand, and then finally scale. So that's actually the core fundamental eventually that I got to the other end of my career in terms of VC or whatnot. Scale is extremely important.
Yeah.
If you have a medical device that can change the world, and we had this case actually in terms of one of our technologies. It's portable ultrasound. Founders, one of the founders had a background in terms of India, and one of the things that they were looking at early on was, let's make this portable ultrasound that we can make smaller, cheaper, et cetera, better than existing ultrasounds. And why don't we take it to developing markets? Because they can then buy it for cheap, they can use it, et cetera. And we told them no. Well, we suggested no. It's not like no, but we suggested no. Why? Well, because it's a semiconductor-based technology for one. So that means its marginal cost goes to zero over time. So what you're doing is you're actually having the most expensive units and selling into the developing markets first. Expensive for you, developing markets first, but you're also creating a perception, which warranted or not, if you're selling those products that are low quality or low price, quote unquote, to these developing markets, you might not actually get the intellectual leadership in terms of developed markets to actually buy into it. And then you can't go the other way. Versus if you become extremely well adopted, even charge more in developed markets because you're able to compete well within those markets, you can then take that cost curve, learning curve, come down in terms of semiconductors, have your marginal cost for the semiconductors be near zero, and basically scale infinitely in terms of developing markets. At the end of the day, if you go in the direction that seems less impacty to start with and more profit maximizing in order to scale, you can have a far larger impact ultimately than you would be able to the other way around.
Got it. And you talked about health tech companies. You've also founded Linus, which was a women's health tech startup.
Yes.
How did that begin?
That was partially just because within Berkeley, within some of the different people that I had met there, including Anna, who is an engineer at Amazon Lab 126, Liz, who's my wife, actually, in terms of looking at the particular space, just like many other spaces, just in terms of health technologies, women's health, women's wellness is actually one that has doesn't have that much data around it, doesn't actually have that much good research around it, and is actually pretty hard to quantify in terms of many of the things there. So there's been more of a movement over time, especially the development of femtech and everything else that came later, and specialized funds that actually target it. But at that particular time, we were also seeing an opportunity where, look, we can actually integrate a lot of these cheaper sensor technologies. We can integrate a lot of these different technologies in terms of AI and whatnot, and start to bring more insights that in an area that actually has a lot of low-hanging fruit. So that was one of the big concepts in terms of for Linus at the time. And actually segs, again, quite well into many of the other technologies that for creative ventures we're investing in today. There's a lot of different areas that are pretty hard to measure that now with new technologies, you actually open up and are able to go after them. So Echo devices was one of the examples I mentioned. Again, shrinking down portable, traditional ultrasound array into just semiconductors, making it far cheaper, easier, more accessible. Or say in terms of a C-Light, another one of our technologies, which basically uses an ophthalmology laser to be able to diagnose neurological disease. So a lot of these different technologies are trying to actually come into the market using AI, using cheaper sensors, and are able to use that essentially to be able to create new capabilities and provide better care for people. Anyway, so that's long sort of segue in terms of that. But yeah, that's sort of how part of that journey came through.
Got it. Interesting. And, we were discussing about deep tech, and I've recently fallen into deep tech sector. I was interested to understand, how does a VC evaluate deep tech companies from other software companies where there's a different scale. If you can explain more on that, how does creative venture capital looks into it?
Yeah, so there's an interesting difference for deep tech versus a software startup. Is at the end of the day, for a software startup, many VCs, and I would agree with them, by the way, would argue that what's paramount is the team. So at the end of the day, if you have a software startup, you're going after a market or whatnot, your hypotheses could change quite a bit. You could pivot quite a bit in terms of different markets. Even companies that are technology enabled and have a foot in the door in physical technology, say Netflix, they changed very much in their business model over time, right? In terms of very famously from DVD mailing to streaming. But there's a through line in terms of it. And there's a capability of a smart founder to a smart founding team to keep pivoting and figure out the right way to actually address that market. That doesn't work in deep tech. Because if you caricature a software startup, and I know it's a caricature, but let's just work with me here. You can rewrite your code over the weekend.
Yep.
You can redeploy it on your cloud, on your cloud host, and then suddenly you can change your Google AdWords, and guess what? Next week you're in a new market. That doesn't work for robotics. That doesn't work for synthetic biology. That doesn't work for different healthcare technologies. A lot of these different areas, you just need to have the right target to begin with. So the thing that we say is not only do you need a stellar team, you need to actually know very specifically, where are we actually going at? What are we actually going after? And how are we actually tackling this market? The technology, and this is the funny thing, we're a deep tech firm. You'd think that, we're technology geeks and whatnot. And yeah, a lot of us in terms of creative ventures have PhDs, but the technology is just the tool. The technology is just the thing that you use. I care as little about the technology. Well, I care a little more, but I care as little about the technology as you use as a software VC cares about what programming language you're using to create your tech stack. I care about your market and the application. And with this technology, is it something new that's being enabled? And are you actually tackling this market correctly? Since it's very easy to go after a specific market, do a certain way, do product development in a certain way, and be stuck. Okay. Because you've burned through all this cash and time, and now you don't have enough time to pivot. So if you're, say, a LiDAR company who went after a market that's not automotive, cannot go towards automotive, and you specifically stayed in, say, like robotics or something, you might actually be kind of screwed because your big market is over here. You optimize for this market. You can't go from here to here. If you're a software startup, you change a few things, you can make that work. But if you're a hardware startup or something that has a foot, or not just a foot, but is almost entirely in the physical world, it's very hard to just bridge that without we just need to found a new company.
Got it. And a lot of times I've seen that in deep tech, as you mentioned, a lot of money has been spent on product development with no traction. But do you think, a deep tech company should have some traction even at a pre-seed or seed stage, before they look at pivoting to another, will it be possible for it to pivot? Yeah.
Yes is the short answer, and it should have a lot of traction. And the reason is because if you are a deep tech company, you would want your product to already be useful. Again, for the same reason and the same dynamic, you need your product to be useful immediately. I see a lot of deep tech companies whose thesis is basically, look, we're going to develop this technology. We're going to go after this market that we know is too small and not interesting or whatnot. But, we're going to learn so much and develop so much that eventually we'll be able to go after this much larger market. This traction is so little, but guess what? It's just going to enable it. And the reality is we've never really seen that work. We've very rarely seen that ever work. And when it does, it's kind of by accident. For the most part, you need to be in a industry that is so desperate for your solution that they're willing to pay you up front, not have the product for say like 6 months and then get it 6 months later and be running with it and using it into the ground. That is how critical your target market should be.
Okay.
And that is a case that we see a lot. So for example, in labor automation, a lot of our companies in this particular space, we're, by the way, not taking away jobs, we're actually taking away a lot of job openings. It's the companies are desperate for a solution. The existing employees are being worked into the ground, and there needs to be something in terms of tools, automation, to be able to help bridge that gap. And we're seeing a lot of interest from different, say, food services, say hospitality, say cleaning and labor, et cetera, to actually go in that direction and be able to be willing to pay a lot just because it's such a crisis right now in terms of labor. So that's the kind of problem that you want to go after, and you want to find a specific industry that is desperate to solve that problem.
Mm. Interesting. You talked about labor shortages. Obviously, I want to talk about ChatGPT and OpenAI, obviously, but but do you think ChatGPT is like a Google killer, and what will Microsoft investing a lot into AI? What are the implications for automation going forward? Do you think automation and service jobs and will create a shortage for jobs or job opportunities going forward?
Yeah, so what we're seeing empirically, just in terms of our companies, no, not a shortage, because right now there already is a shortage. So if there already is a shortage and you're plugging in automation, what you're doing is you're actually filling in the shortage, and you're actually enabling, say, let me just give a quick example. Say for a restaurant, let's not even worry about the specific technology here, but say for a restaurant, you have workers working there. They're understaffed. They can't keep up with lunch rush. And then afterwards, they're sort of sitting around or whatnot. The business has extremely thin margins. You might argue, well, you can't, and they can't hire anyone because one's like, everyone's leaving, or et cetera. Well, just pay more. Well, the business doesn't have the margins to pay more. Where are they going to find the thing to pay? Well, just raise prices. Well, if they raise prices, then customers will go elsewhere, and then they'll have even less margins, and they'll go out of business. They're stuck. They have these workers, you can't pay them enough. No one's happy. Now you add an automation tool. Suddenly each worker is 10 times, say, more productive or whatnot. And, a lot more, and the margin expands substantially for the business. Suddenly the business owner is going to be happy to take some of that and retain workers to, if nothing else, consider them greedy, consider them whatever you want to consider, but they'll want to pay them more just to take away the headache of having the constant turnover in terms of workers. So suddenly that automation actually is able to create better jobs, higher paying jobs for workers. When people say that automation is going to take away jobs, it's the same thing, in my opinion, as saying, like, you know what, now that we've innovated and created shovels, construction workers will just be out of a job. Mm-hmm. They can't, no one will want like construction workers. Well, no, not really. It's like, okay, there's still certain things, you're going to have human supervisors, do whatever it is. But because you actually have more automation, more productivity, you're suddenly able to have higher margins and pay more. So that's what we're actually going for in terms of a lot of these different areas. Now, ChatGPT and whatnot, I can also talk about just framework-wise, and sort of the short answer there is there's a distinction between knowledge workers and labor, just in terms of, hands-on like labor. Knowledge workers have always been easier to automate, quote unquote, in some sort of way. Everything they do is on the computer. Everything they do is non-physical. The computer or AI can learn off of literally every single keystroke and action the person is doing. It was always easier to try to automate that with AI. Trying to get a machine to manipulate something in some sort of really sensitive and a way that's super intuitive for even the lowest trained human, that's super hard. It's actually super easy to get ChatGPT comparatively to get ChatGPT to spit out a bunch of things that look like a programmer wrote it. So knowledge workers have always been easier to try to replace, but in reality, what we usually see is similar actually to the labor side. You supplement people. So in terms of artists or whatnot, maybe digital artists will start to use ChatGPT, or not ChatGPT, but Midjourney or some of these other generative art tools to create, because that was a big thing. It's like, oh, artists will be out of business. Like, well, maybe they'll use that to either create inspiration or start an art piece and then refine it and create their own creations from it. It's a tool. It's like, is it that different than a Photoshop filter? Same thing in terms of labor. It's like, at the end of the day, you're not going to throw out all your labor. You're going to change the nature of your labor. And at this point, in terms of people, there's an interesting Gallup poll, actually, and stop me if this is going too much of a tangent, but there's an interesting Gallup poll where out of, billions of people, less than 10% of people actually have jobs that they're happy with.
Yeah.
There's a pretty big gap in terms of like jobs, like their jobs and jobs that people want. Automation, in our opinion, in terms of seeing the reality of it, can help bridge that gap where we get people the jobs they want. We're not just trying to throw people bodies into positions. Like, no one's happy in that case. So I'll stop there in terms of my.
Interesting. If AI can solve the problem, because in US, it's mentioned that 80% of people are looking for new jobs in 2023 and in the middle of recession. So it's crazy, if AI can bridge that gap. But I want to talk about the aging populations around the world, especially I'm from India. We don't have that aging problem right now, but we have that problem in China, and I think India has surpassed China to become the most populous country. We'll get to know in the next couple of years. But what would be the demographic change, especially in developed countries and countries like China, where you'll have aging population in the next couple of years?
Yeah, I mean, that is the fundamental crunch point that we're seeing for a lot of these different countries. It's like for the world, actually, because like you're saying, India is an interesting case. There's certain countries in terms of Africa that are interesting cases that don't necessarily follow this pattern. But for the most part, the entire world is aging. Even in, say, China, Indonesia, like different, what you would consider developing countries that, should be young and grow. No, they're aging. They're not as bad as, say, Europe or whatnot, or Japan, but they're aging. So what happens is, one, you have this labor shortage. Like, there's a reason why everyone's talking about labor shortages right now. And that's because we are seeing the demographic crunch. It's simple, like ratios, right? If you think about it, more old people, fewer young people, that's going to create issues in terms of manual labor, because suddenly you have fewer people to do it relative to the population that you have. That's just simple ratios in terms of it, right? But there's another thing too, right? It's just in terms of healthcare. We also are having big crunches in terms of healthcare, because suddenly our spending per GDP capita is going up in every single country, basically. And that's because it just costs more and more to support a larger and larger aging population. Now, you might argue they might be unhealthy or other stuff, junk food, other things, fine, whatever. But the fundamental thing is they're all aging. Forget about if they're eating the healthiest thing in the world. They're still aging. It's still going to cost more. So no matter what, you have these two huge forces hitting the world at the same time for the same reason. And in our opinion, that's actually one of the biggest trends next to, say, climate change that are impacting the world and are going to be big challenges for countries all around the world.
Got it. But people are living longer. Do you think earlier people used to retire at 65? Do you think people are going to work even longer, into the 70s?
I mean, for some people they will, and in certain cases, just financially speaking, a lot of countries will probably change retirement ages just to keep their system solvent. So that's probably coming. But even so, if you're now 65 versus 70 or 75 or whatnot, you're still not working a bunch of manual labor jobs, right? You're still probably unhealthier than, say, like a 20, 30, 40-year-old. You still require more in terms of healthcare services, at least for that fundamental imbalance in terms of both of these sides. That doesn't specifically solve it. Maybe you'll be able to create a little bit more output in the economy because of these other things, but the drag from it is so large that will be a marginal change relative to the general drag for both the labor productivity issue and the issue in terms of healthcare costs.
Got it. And you talked about climate change. It's interesting. I started at a university here in Europe, and Europe has done a much better job than Asia or other continents where there's a lot of focus on climate change. Do you think startup founders should care a bit more about the macro environment and the climate change, especially since I think Europe has taken, especially France and UK, they are forerunners when it comes to climate change startups. What are your views on that?
I mean, there are definitely opportunities in it. It's definitely a huge area that needs work in terms of it, right? If you want to make an impact in the world, we started talking about nonprofits, right? If you want to make an impact in the world, climate change is definitely a big one to go after. But there's a way to go after it, right? Just like we talked about in terms of deep tech, where it's like you want to go after something that actually has a burning problem right now. Well, for climate change, we see a lot of people going after these different things where it's like, well, once there's global carbon pricing, this business model will just work. I mean, we've been talking about potentially having global carbon pricing every 10 years ago. And basically throughout this period, since we actually started to talk about climate change as an issue, right? It hasn't specifically happened. It's happened in very small forms, whatnot. It's not really a thing still. But in terms of if you actually see for the UN's, like all the different climate targets and whatnot, what actually made the biggest difference in terms of global warming? It was the change in renewables. It wasn't because governments suddenly started pushing renewables a huge amount. They subsidized it, which definitely was helpful, but it was because there was a big push in terms of renewables where the technology came up. And admittedly, if you talk about it, because China started producing a lot of solar panels and stuff, and that brought the cost way down and whatnot. But the technology advanced, and suddenly renewables were competitive with fossil fuels. That's what made the big change, and that's what actually started to push a lot of it. It was technology change. And just in terms of how we see the future developing, it's the same thing. It's like, it'd be nice if policymakers all got together, all globally coordinated, et cetera. I think sometimes you have to confront reality and realize that if it hasn't happened in all of this time, it might not actually happen, especially not fast enough. You would have to look towards the expectation of what actually worked last time. Well, it was the development of technology. Same thing here. There's a lot of opportunity in, say, storage. So renewables being cheap is great. They're just kind of intermittent. So the sun doesn't always shine, wind doesn't always blow. I guess geothermal stays pretty constant, but at least for the two other big ones, those things don't always generate power. Or create energy. So how do you actually store that over time? So there's a lot of opportunity in, say, stationary batteries, other things to bridge that gap. But yes, there's a lot of opportunities today in terms of critical problems in climate change that you can address right now. That's not trying to predict something that'll happen or not in the future.
Got it. And especially when it comes to creative ventures, you invest into early stage startups. How do you analyze the question and think through when you meet founders and you're asking, what needs to come true for this business to make it a great business? Or what are some of the questions that you think through?
So I would flip that because in our opinion, you can ask the questions, but you should already have the answers going into it, because for us, it's too easy for someone to be charmed by a charismatic founder who lays out an extremely hard problem that's a huge market that's so hard to solve and no one else has solved it. But coincidentally, the person sitting in front of you with this slide deck today, right now, has the perfect solution to solve this problem. It's just far too easy to fall in love in terms of that and get caught by a great pitch. You need to go in with your own ideas beforehand. You have to have done your homework and know, okay, these are the types of markets that actually work in terms of this. These are the type of enabling technologies, or these are the characteristics of the enabling technologies that you would need to have to actually open up these markets. And you have to go in beforehand with that and be armed with that to be able to ask one intelligent questions about the technology that you and person and business that you see in front of you, but also not just be captured by fancy pitches. So that's our opinion on how a VC should be approaching it. And plus, and this is a pet peeve of mine, I've heard a lot of VCs say, I meet so many brilliant founders, I learn so much from them, et cetera, et cetera, et cetera. It's like, that's great and all. And I do learn things from different founders and whatnot. It's great. You debate and have interesting insights. But if the founder who also needs to deal with creating the business, hiring, managing the business, dealing with founder dynamics, raising money, and doing all of these other things and functions, knows less about the specific market, investment opportunities, investment path than you, the professional who specializes only in that, I would say there's a problem. So in terms of the relationship value between like the two of you, I would say that, yeah, the VC should probably be bringing a little bit more to the table. So our opinion is we should know more actually in terms of the market dynamics, industry dynamics, and funding dynamics than the founder, who has a lot of other things to deal with.
Got it. Interesting. And I had the fortune of working with some brilliant founders. I was very early into before the call I mentioned I was very early into a company called OU Rooms, which was led by Ritesh, who was a Thiel fellow. It was quite interesting because he was part of the Thiel Fellowship, and he came in so early, and he got backed by SoftBank and Sequoia and all those companies, all those VCs. But there was a recent article from Hunter Walk from who is a VC, who said some of the best founders are difficult people, and how do you do a reference check for entrepreneurs who can be difficult but can make great products? How do you judge that? This might be a difficult founder, but he's genius. He's brilliant.
Well, it depends on what the business needs, right?
Right.
So in certain businesses, I'd say there's nuance there. Right. So if what the business needs is, say, a front person who you have a person has great vision, has recruited a great engineering team. Engineering team is amazing going after this problem. They have the best solution, blah, 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 blah. All you need is a founder who can paint an amazing picture of the future and raise a ton of money in order to actually fund that engine. Right. That founder can be as difficult as you want, right? Ideally, it's a little annoying to work with, but that founder can be as difficult interpersonally as that founder wants to be, because the goal and the need of the business is basically to have someone who's a great storyteller that can keep money flowing into the engine that creates the value. Right. So that's a particular founder archetype that we see a lot in terms of certain types of businesses. But what you need is a business that actually you need to be able to work well with, say, different large entities, corporates who might be kind of slow moving or potentially like difficult to work with. Say, if you're working again in that battery space and you're dealing with large utilities and governments and government regulators and whatnot, you might need a different founder archetype. Now, in terms of interpersonally, do we need the person to be the most eloquent, most interesting, someone you'd sit down and have a beer with? Yeah. No, not necessarily, but you do need to look at the business and see what is most critical for the business. For us, because we are investing in deep tech, a lot of the founders are actually PhDs who have never founded businesses before. They're the only ones who can found the business because they're the only ones in the world who spent 7 years working on this specific technology or whatnot. It's like, yeah, it'd be great if you could find another CEO and whatnot. But in reality, for the business at that stage, usually it's still the founder. And maybe the founder will either grow into it or transition out or whatnot, but it's that founder. So if we're looking at that particular perspective, then that founder has to do it. But what qualities of that founder are necessary in order to actually make this business succeed, or what other puzzle pieces that we bring in to fill in for the gaps for this founder? So again, I'd say there's nuance. It's like, I think for a lot of these generalist VCs, there's a certain archetype that they invest in because of the certain types of business that they have. The types of business that they have need, and he has other great qualities and whatnot, but just to be frank, in terms of like one of his greatest quality for Elon Musk is as a front man in terms of being able to create publicity and bring in money. Yeah. For some of these businesses, that's what they need. And interpersonally, they might be weird, but that's what they need, and that's what will drive success.
Got it. Interesting. And I was wondering, how does Creative Ventures engage in outcome scenario planning when they're looking at making investments?
Yeah, and a lot of that has to do with really having a good understanding of what again, what markets are you going after and what are the boundaries of it? So BCG and Hello Tomorrow actually did a pretty interesting study. If you were to guess whether software startups or deep tech startups, like among these two, which one takes less money and takes less time to exit, which one would you guess? Like, I think most people would guess software startup, right?
Yeah,
It's like
yeah.
software, you just write it, you just go. No, as it turns out, especially for a modern software startup, you can just keep going, keep burning marketing dollars and keep trying to do user acquisition and just go off into the sunset and keep going and going and going. Whereas deep tech startups actually take less time and less money usually. But what this chart that they have doesn't capture is usually these deep tech startups are also more finite. Whereas if you have a Google, you have a Facebook, you even have a Salesforce or whatnot, you just infinitely go on and keep burning marketing dollars and trying to grab more and more and more of a very, very, very potentially large market. For a deep tech startup, say in medical devices, in medical diagnostics, you get to a certain point, you go through FDA, you get maybe some other regulatory clearances, you've shown impact in terms of this, and you've expanded into different clinics and are used clinically now. You probably are looking to sell to a large medical device company because they literally have a global footprint that they've already built as a sales force to push this out to every single corner of the world. There's no point in you sitting around and basically trying to build that. At that point, you've hit an end goal, you've succeeded, and now you're just basically negotiating to exit at that point. For deep tech startups, that's the thing that you always have to keep in mind. They usually have a much more constrained, finite, but still large, but still constrained and finite and known end point. And you have to be aware of that just in terms of going out. And in a way that makes our outcome planning easier is we don't have to sit around and go, well, this could grow infinitely. So who knows? But for that, you have to be disciplined in looking at and understanding that's where this business is going.
Got it. Interesting. And again, I wanted to understand how do you approach startups, especially since you look at US-based early stage startups. How do you find those founders and startups?
We tend to be pretty enmeshed in both academic, government funding, different startup challenges, different accelerators. We're sort of in a lot of different places that the deep tech, because we were one of the earliest to the scene, we tend to be in a lot of the places that these startups are around and we're known within those particular spaces. So we end up seeing quite a bit pretty early on for us. So for example, we're pretty enmeshed in Stanford and Berkeley ecosystems in terms of Bay Area, where we're based, but academia is a pretty small and tight-knit community. So say in terms of different robotics and AI departments, different microbiology departments, et cetera, it's all pretty well connected in terms of it. And people also see that we've done investments in other interesting companies in the space very early on for many of these different founders. So we actually have a nice problem nowadays of having a lot of inbound, and we try to actually allow ourselves to take a lot of cold inbound too, because you never know from where you're going to get another great startup. So that's sort of how we end up approaching it, because of our specialization, because of being in a lot of these right places. We end up seeing and being within the flow for a lot of these deep tech startups very early on.
Got it. Interesting. And we obviously I want to talk about the impending recession, and a lot of people are worried about the jobs. There've been a lot of jobs which have been lost in big companies like the Googles and other companies. What advice would you give to founders who are looking to raise funds in 2023, especially for deep tech startups?
Yeah, I think for deep tech companies in particular, again, it's like having a differentiated technology alone is not enough. In general, you're going to have to understand what market you're actually going after. Even if you're charismatic enough to raise a bunch of money off of just a pure vision of look how big this technology is, you're going to fail very quickly after if you don't have a good sense of here's how I'm going to execute against that. If you yourself cannot figure that out because you don't have the background or whatnot, find someone who can help you, who can, even just advisors or whatnot, and build out that at least initial hypothesis of what direction you have to go. And then you can get market research, you can have like talk to different folks and figure that out. But that's an important first step that I think a lot of starting founders, especially ones who are drawn to deep tech, don't do. Because again, many folks who enter the market tend to be PhDs or more technical folks.
Yeah.
It's not usually a MBA who leaves and goes, you know what, I want to make a synthetic biology startup that does advanced materials in this thing or whatever.
Right, right. Got it. Interesting. And I quickly want to do the top three. What's your favorite business book?
I'd say probably in terms of, there are some negotiation books that I think are interesting, but I think one of the most interesting books that I've read that's sort of a classic is Influence by Cialdini. It's a psychology book. It's about influencing people. And although that kind of sounds weird or maybe bad, it's also just an exercise in empathy and being able to look at things from other people's perspective. I think a lot of folks, especially within the tech ecosystem, could definitely stand to think a little bit more about that and be able to communicate more effectively, just in terms of thinking about how they present everything. Since at the end of the day, talking and communication is about communicating and having the other person understand what you're saying. So having a good framework for that is useful.
Got it. Interesting. We'll put that in the show notes. And if you could go back in time when you started your career in investing and you started with creative ventures, what is the one thing you would have focused on or done anything differently?
I think in terms of, this is actually a piece of advice that I also give to folks who, because I've lectured in different, like guest lectured at different things and whatnot. And, a lot of young folks have asked like, oh, what's the best way to like form my path in this or that or whatever it is. And for me, I kind of fell into creative ventures a little bit accidentally. And just in terms of, I think most VCs do. Most people don't go into tech looking to do VC. But I just say, just in terms of a lot of the early, like, okay, let's figure out this, figure out that. I'd say it's similar to what I say to young folks who say, all I need to start my startup is go to graduate school, do this, work at this big tech company, and then have like 3 years as an executive at this thing or that thing. No. Don't wait. The more you put conditions on yourself in terms of what you're willing to do or not at a particular point in time, the less experience that you're going to get in the relevant area that you're looking at. And the more you might end up just regretting having spent 10 years doing something else completely different, trying to prepare for something. And for me and for us and whatnot, there are certain areas that we knew we probably actually had a pretty good idea how to invest in, that we had stayed a little bit away from because we were thinking, well, technically speaking, we don't all have PhDs in this area or whatnot. We do in other areas, but we don't in this area. Maybe we should hesitate a little. And I think over time we found, no, actually, if you have good insight, good interdisciplinary understanding and thought process towards that, and you actually apply that and go for it, you can have a huge impact and start to learn and be able to have that expertise much, much sooner than if you just sit around and wait and hope to gain that in other ways.
Got it. And Rafael, what's your favorite online tools? Example, Gmail, Slack, Zoom.
So I think for me personally, I get so many emails. I really like Superhuman, which is an email client that you pay quite a bit more for a month. Actually, I guess not that much per month, depending on how it is. But Gmail used to be very fast. I used to be one of those Gmail power users. It got very slow. So Superhuman is now sort of the thing that fills in for that and is very productive because I get far too many emails every day. So.
Got it. We'll put that in the show notes. We had Vivek Sudera, who's the founder of Superhuman, on the show. We'll put that in the show notes as well. And James, what is the best way people can reach out to you and know more about creative ventures?
Yeah. So again, we actually take cold pitches and whatnot. That's at invest@creativeventures.vc. We do review them. Sometimes it does take us a while to get through because we do get a lot of emails, but we do review all of those. Always happy to also take, if folks are in the Bay Area, especially in terms of Berkeley and whatnot, in that general area, I've done different talks, lectures, things. I've worked in a lot of the different accelerators and again, given talks and stuff there. Always happy to, talk to folks, give advice, talk about things, just hang out. So yeah, just look forward to that. And as said, invest@creativeventures.vc. I'm also on Twitter as James Wang. So just like because my name is very common. So James Wang, just one of them. So yeah, I'm there as well for as long as Twitter exists currently. We'll see going forward.
Awesome. We'll put that in the show notes. James, thank you so much for taking your time and speaking to us. I really enjoyed my conversation with you.
Wonderful. Thanks so much.